welcome to the Morisey-Dart Group's Banking Industry Update, a focused look at trends and challenges in financial talent management today. I'm your host, Angeline Marie, and joined as always by Executive Recruiter Beth Terron, here to share some information about the increasingly transparent small business administration sector on a national scale. Beth, I know your project scope, you've pretty much seen it all. Why don't you tell me what message are you looking to broadcast today to your current and future business partners?
Thanks, Angeline. It's always a pleasure to be part of such a high exposure program. And I guess today I'd really just like to translate the 500 calls a week I make to SBA professionals into reality. And in my experience recently, there's really been a concrete set of must-dos and then can't-dos involved in building a successful and profitable and, most importantly, stable SBA team. And I'm going to channel David Letterman here, so bear with me. I'm going to run through a top 10 list of what I'm hearing, seeing, and addressing in today's market. 5 will be good, and 5 will be, not so much.
Okay. Well, then let's start with a positive. What are the top 5 elements to building a successful SBA team that you'd want to communicate to both your clients and candidates that properly address the government-guaranteed lending platform?
Perfect. Okay. My biggest recommendation would be to start or grow a team from the back to the front. So this means taking the time to secure processors, underwriters, and closers with SBA protocol experience that can handle new business coming in, not loading on a bunch of business development officers first that will bring volume that can't be, properly handled. Secondly, I always wonder, where did everyone's willingness to train disappear to? My most successful clients are those that are able to see the potential in conventional business bankers that have an entrepreneurial spirit and an eagerness to learn. And there are tons of training resources from organizations like NAGLE that do provide a systematic transition into SBA specialists. So, without this willingness to train, I'm seeing talent that is just overlooked and underutilized. I think also imperative is the concept of education. Yes, most banks lending SBA focus on borrower education, making sure clients know the benefits of the SBA program. But those that I work with that really earn the highest quality credits are those who also educate their bankers. So conventional bankers, those on the teller line, personal bankers. If those people know when to make referrals to the SBA specialists, much more profit to be had. Also, on a positive note, people that are differentiating themselves on the compensation side are doing so by putting together thoughtful incentive plans that let their BDOs have multiple streams of take-home. So these plans include elements like a base salary high enough to let people, be comfortable, have a work-life balance, no cap to the structure, make sure it's tiered by volume, and then maybe some extra opportunities to earn extra points on secondary market revenue or commercial real estate deals. And I think on this note, also very important to make sure that incentives can be earned day one, they're paid when loans are closed, and that they can split any fees associated with working with business or loan brokers. And lastly, on a positive note, the most successful SBA groups that I see are carrying those incentive plans to the back room. So when your support staff, your processors, your underwriters, your closers that we just talked about, when they feel they're as equally valued and rewarded as the team members that are out there developing business, it lends for, a small banking pun there, lends for just a much more collaborative, cohesive, and, ultimately cash-generating environment.
That's good stuff, Beth. Now, let's put it all on the table. What missteps have you seen taken when attempting to either start, grow, or enhance a market-leading SBA group?
Okay, you asked for it, you're going to get it. From a team-building standpoint, I think organizations have to realize that 5 is the new 10. Holding out for a decade's worth of experience just isn't realistic in a field this specialized. The sweet spot in terms of tenure for the SBA can and does, fall into that 5-year range given consistent production and strong credit skills. I think product and footprint limitation can really also hinder the ability to maintain a strong team. If a business development officer is only allowed to work in one county, one state, one region, their potential borrowing base is reduced in a way that's out of their control. same reduction occurs if they're not able to present a full set of product options, like what a 7A structure would look like versus a 504 or an Express or even a USDA or even a conventional route. And next, while believe me, I am not recommending that lenders don't monitor their portfolio concentrations. If they start to get kind of too snobby about certain industries, that business is going to land elsewhere, and a second credit exposure with the same client in the future is going to be lost. So, sure, C-stores, gas stations can be risky, but if you do have BDOs on your team that can tell a well-seasoned, well-cash-flowed borrower from a no mitigant dud, the deal should at least get a look. It is the number one reason I'm seeing BDOs make transitions. They're sourcing decent paper, and it isn't even getting a shot to get to committee. Another financial faux pas I see is regarding pricing. And again, yes, you need to make sure your BDOs don't rely on rate alone. And yes, floating rates gain ancillary revenue from the secondary market. But no, not every borrower is going to benefit from the same structure. Offer the choice. I have literally seen business development officers take a job offer that was $30,000 less in base salary because that bank would let them even explore fixed pricing. And lastly, just not putting enough resource behind the SBA group as a whole can damage success, especially if you have BDOs operating remotely, which is increasing as well. It has to be extremely apparent that SBA is a priority, that it's not just a last resort. And this can be addressed by having dedicated marketing and support teams, making sure PLP status is kept up, offering continuous compliance training, and, of course, providing adequate technology in terms of a CRM system.
Wow, Beth, that is a lot for financial institutions to consider. It sounds like while there's no magic formula, there are some obtainable pillars to base an SBA platform on from start to finish. Well, Beth, we do appreciate all of your input today, and we know that our country's entrepreneurs are truly poised to increase their business, but only when they're supported by lenders that are true advocates for the SBA program.
You hit it spot on, Angeline. It really will be those and only those organizations that put the right amount of resource behind their platform that will access and serve small business owners. And, now if only we could get the regulation details out for the new 504 product, everybody would be happy.
Well, I'm sure you'll keep all of our listeners up to date on how the SBA space is evolving and how they can adapt to those changes. And again, from the Morisey-Dart Group and Executive SBA Recruiter Beth Terron, we wish you a prosperous and now a more educated day. Goodbye.